Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, August 30th, first day of school around here in Redondo Beach where I live. So, welcome back to school, kids, and I guess welcome to vacation time for you parents. So, anyways, let's go ahead and start with their economic news releases today. And the first item we'll touch on is the Case-Shiller home prices. We previous month we had 1% for July, and this is going to be for August, so it came up to about 1.1%. But if you look at the year over year, it's not so good. It was down about 4.5%, so still not great where we need it to be, but slight improvement, month over month. So let's take a look at consumer confidence. We had 59.2%. We were expecting a little bit of a dip, and it completely dropped. A lot of that they kind of think maybe over that course time frame that people are just getting disenchanted with the debt ceiling crisis that was going on with the Congress, to the downgrade to the U.S. economy, stuff like that. So we'll see if it rebounds next month, but it's down quite a bit, obviously, and that's something I think we really need to kind of pay attention to as people are not comfortable. People aren't, if they're not viewing the economy growing or these type of things, they're going to be watching their money, and if they're watching the money, that means they're not going to be spending. If they're not spending, that means the economy basically comes to a halt, and we basically are in a recession. So those are important factors we have to kind of pay attention to here. And the next one's going to be coming up at about 11 o'clock West Coast time, Pacific Standard, and it'll be the Fed minutes. They're going to release the last meeting's minutes. It'll be interesting to see what they have to say. And so we'll start off what the headline news are. And with that, we have the stock market's up a little bit. There was down, the Dow was down a little bit earlier, and then when I created this, it was up. It went up a little bit. So we'll see where it's at. Fed President of Chicago, Evans, basically supported another easing coming in. He's a big advocate for it. It'll be interesting to see what the minutes come up, if there's any mention of it, of support for it, or where things are at. And then also, right now, I've been seeing a lot of articles talking about talk about possible streamlining. And I think that's something that Obama's administration is kind of working towards, looking at trying to make it a little easier for those to refinance. And they're kind of equating that to a possible, equating it to like something of a tax break, because people it's not so good for bondholders, but it's good for people, and they're going to be able to come in and refinance at lower rates and basically save themselves a lot of money, and hopefully use the discretionary money that they were saving from that, and maybe use that as spending money to get the economy kind of moving forward. Kind of like tax breaks, when you cut the tax a little bit, they have a little bit more discretionary money, and they're more willing to go ahead and spend some of that money and get the economy kind of moving. So this is something to talk. Look in the near future, more and more stuff coming out, maybe for possible refinances while the rates are low. They obviously like to see people take advantage of that. So that's, obviously for my profession, that's going to be helpful for us, and I hope it helps out a lot more people than rather than all the talk that's been going on, where a lot of these other programs were not helpful, like HAMP. Maybe less than 1 million people benefited from that. Some of these other programs that weren't so good. So let's go ahead and take a look at what the bond market is right now, and where interest rates lie. As you can see here, we've been kind of going up and down these last couple turns. We've had some gaps. We've had a gap. Right now, we got a gap here between Tuesday here and Monday, and then Friday and Monday, and then we also have Thursday and Friday, or Friday and Monday. So it's just a lot of gaps here, kind of going back and forth. It's real showing some instability right now here. This week is going to be very volatile, especially when we have jobs numbers at the end of this week. So we'll have to see, but the market could really dramatically change around the Fed minutes around 11 o'clock Pacific Standard Time. So keep alert. Definitely want to make sure. It could go up or down either way, depending on what comes out in that. So, all right, folks. But interest rates are a little bit better today compared to yesterday. Again, you guys are looking to buy a home. If you're a home buyer, if you're looking to refinance, take a look at my website, CaliforniaMortgageTips.com. You'll get a lot of great information from there. And go ahead and catch you guys tomorrow. Have a wonderful day.